Assalamu alaikum friends, welcome to question number 22 of SBR. So this is cloud. Okay, as you can see background, and then we have some presentation of loan in the statement of cash flows. Then we have share sale, because this is question 2 of SBR. So you will be having some issues and ethical question as well, where two professional marks will be there. Okay, and each will be different, each issues are different. You'll be having short paragraphs. For example, first one is regarding loan in the cash flows. Then we have share sale. Then we have revaluation of PPE. Now what are we required to do? Explain with suitable calculations. Okay. How the above transaction should be dealt with in the financial statements for the year ended 31st December 2001, and discuss the ethical and professional issues raised. Okay. So here if you can see how this will be dealt, and you have to discuss ethical as well as professional issues raised. Professional issues means accounting issues. Okay, whether it is identified or whether it is recognized incorrectly, how according to the appropriate standard it has to be recognized. Okay, and ethical issues you will be using dealing the 5 fundamental code of ethics of the from your ACCA. Okay, you will be using that, and the safeguard that you need to apply, what are the threats. Using this you will be answering your ethical questions. Okay, now let us start with this one, and it's for 18 marks. Okay, and this 18 marks you need to allocate among these 3 issues. But professional marks is only for ethical principle. Okay, because they told professional marks will be awarded in this question for the application of ethical principles only, 2 marks that you cannot spread among the others. So let us first understand what's the background of this company. Guys, it's very important that you start by reading the background before you even read the issues, always. Okay, so Cloud is a publicly funded company, is preparing financial statements for the year ended 31st December 2001. The profit figure reported in the interim financial statements were lower than shareholders expected, and net operating cash flows for the year are below budget. The directors of Cloud receives a bonus if Cloud's operating cash flows and profits. Okay, so what's happening here? The profit figure is lower than the shareholders expected. Okay, in the interim financial statement. Next, we have net operating cash flows are below the budget. The directors of Cloud receive a bonus if Cloud's operating cash flows and profit before tax exceeded a predetermined target for the year. So do you see how they are linking this? Their bonus, they are linking it to the short-term profit. The finance director is perceived to be a dominant personality. Why they're talking about his personality and all? Because for ethics you need this. Okay, and also he's a member of the accounts department, many of whom are ACCA members. Follow his instructions without question. Okay, when you are using ethical, when you need to answer the ethics, you have to use a whole case study throughout. It's not just only from one specific issue only you are taking. No. Ethics is everywhere. Okay. Yes, accounting issues when you are coming, for example, presentation of loan, you'll be using one separate standard. Share sale will be using a separate standard. And the third one relating to revaluation will be using a separate standard. But ethics is not like that. Ethics for all the 3 accounting issues, you have to write the ethical issues. Because in each accounting issue, there's an ethical issue. Okay. So first let us start, read the presentation of loan. Cloud has entered into a long-term contract with major customer and negotiated a new bank loan on the strength of his contract. The process of the loan will receive in the current period and are to be repaid over 4 years to 31st December 2005. Cloud has reported the loan process as an operating cash flow. Loan process as an operating cash flow because it relates to long-term trading contract. Okay. So before I go to the share sale, now you have this option, guys. You can read the whole scenario and then answer, or read one by one and then answer. What I follow the second strategy. I read one issue, I entirely complete, okay, writing accounting issues and ethical issues. I actually finish with the accounting issues first. Ethical issues I keep for the end, and then I go to the share sale. What happens because of that? I don't have so much of information in my mind, and I will not be confused. I exactly know what I have read because it's very short. If I want to read everything, you see, so many things are there, so many numbers are here. It's easy for me to get confused and panic more. So I don't keep too much of information in my mind. I just read whatever is relevant. Okay, for example, I'll be only reading this and I'll be answering only relating to this, because accounting issues are separated. You will always find the accounting issues separated. They will not give together under different subheadings. Okay. Usually they give marks separately, but in this question, they didn't give the marks separately. So you have to allocate that 18 marks among these three issues. Okay. And it's wise to give equal marks. Okay, usually it's wise to divide the marks equally. For example, this is 18, so you can have 6 for the three issues. 6 will give you 18. Okay, now let us go to the answer. When you're writing the accounting issues, there are so many issues. There are 3 issues here. So you need to write the subheading. Subheading from the case study itself you can pick up. Okay, presentation of loan in the statement of cash flows. How are you going to start the answer? It's given in the tutorial now. This is not a part of an answer. This is just for your understanding. Okay, so you start by defining the relevant categories of cash flow. We know that cash flows can be divided into 3 categories. What are they? Operating cash flow, investing cash flow, financing cash flow. You need to know which one comes under which category. Okay, so you have to first define that. Use these definitions to decide whether the cash receipt has been appropriately presented or not. You always have to use the rule from the standard to know whether whatever is done in the scenario, is it correct or not. Okay, this is the pattern of answering any SBR question is like this only. If you understood this, you have understood the entire SBR, how to answer. So which standard are we using? IS 7, right? By now you know that it is IS 7. So IS 7 says that cash flows from operating activities are those related to the revenue producing activities of the entity, such as cash received from customers and cash paid to the supplier. These things you record in other operating activities. Okay, you start by defining operating. Now let us define financing. Investing we don't need here, okay, because it is regarding operating or financing. Loan is a part of a finance, okay, and that we have included in the operating activity. So you have to give definition of operating as well as financing, the correct thing and also the incorrect one. Investing activity you don't have to, because it has nothing to do with investing. Okay, so cash flow from financing activities are those that change the equity or the borrowing structure of an entity. For example, if you have taken a share, if you have issued share, if you have taken a loan, all this will come under financing activity. How you finance your business. Okay, so the cash received from the bank is a borrowing, isn't it, in the case? As such, it should be reported as what? It should be reported as a cash flow from financing activity. This is the correct one. But what happened because of the, but remember, it's not enough that you say the correct treatment. You also have to say what is the incorrect treatment and what is the impact of that incorrect treatment on your financial statements. Your last paragraph should include it. So the correct treatment is overstating. This word has to be there in your answer. This is what the examiners are looking for when they say the impact on the financial statements. Whether it your asset, your profit, your expenses, is it overstated, understated? So what's happening here? When you write that bank loan, that borrowing under operating activities, what happens? Cash flow from operating activities are overstated. So because it is overstated, what happens? Then you have to say with a comma, you have to explain further. Just it's not enough to say it's overstated. After that, what's the impact of that? Which is likely to make cloud look more liquid. This is the impact of that overstating of operating cash flow. Your company will look more liquid than really it is. And hence, it may also improve the perceptions of its long-term sustainability, which is actually not, because it's a borrowing. Okay, now coming to the next, share sale. Okay, so remember 18 marks are there, right? So this 18 marks, when you divide equal, it will be 6, 6, 6. Out of the 6 also you have to divide, because we have ethical issues as well as accounting issues. So this 6 you can divide among the ethical and the accounting. So let's say 3 marks for ethical, 3 marks for accounting. Like this, 3 for ethical, 3 for accounting, 3 for accounting and 3 for ethical, like that. Okay, so that's why if you see, the answer is also very short. You will get 3 points for writing 3 marks for writing 3 points. First point you will get for saying that it should be in the, you are defining operating and financing. Okay. So for definition of financing and operating, here you'll be getting 1 mark. For telling in the case study what happened, that this should be recognized as a financing activity, correct treatment, you are getting another mark. For saying the impact that if it's overstated, it will look more liquid and all, for this last paragraph, you are getting another point, 3 marks. This is the reason why your answer is short for 18 marks if you're thinking why. Because we have an ethical issue also for this. Okay. They didn't allocate the marks, you have to wisely allocate the marks. Okay. And whenever you are in this confusion how to allocate the marks, allocate equally. Okay. If it's given 3, then 18 divided by 3. If it's 2, then 18 divided by 2, like that. Okay. Now coming to the share sale. So a profit or loss, definitely this you will be getting when you are selling the share. Okay. Sale of shares in a subsidiary arises in the consolidated financial statement only if the control is lost. Remember, when you are selling the share of a subsidiary, you have to see whether you have lost the control or not. Then only you will have a profit or loss. Let's say you have 80%, you have sold 20%. So it became from 80 to 60%. There is no loss of control. Still, he's a subsidiary. So there is no profit or loss. Okay. But let us read the scenario first. During the period, Cloud sold 5% of the equity shares of Fork for 2 million. Before the sale, Cloud owned 100% of the shares of Fork. Did you see? So from 100, it became 95%. There is no loss of control. This transaction has improved Cloud's cash position while enabling it to retain control over Fork. At the date of the share sale, the goodwill and net assets. So they will give you at that date what is the goodwill and the net asset of Fork. Okay. So this were carried in the consolidated statement of financial position at 5 million and 25 million. That means 5 million is for goodwill, 25 is for net asset. Okay. NCI at acquisition was measured at fair value. Cloud has recorded a profit on the disposal of the shares in the consolidated statement of profit or loss. So this is an incorrect thing. Okay. They should not do. Why? Because they have not lost control. It became from 100 to 95. Still control is there. So you cannot recognize profit. There is no profit or loss. This is incorrect. So now what do you have to do? Like how you have did for the presentation of loan. First you start with the appropriate standard, define it. Second you tell the correct treatment. Third you say what is the impact of that incorrect treatment. For example, when you recognize a profit. Okay, so for that 3 marks. Let us go to the answer. If the share sale results in a loss of control, immediately you can say, okay, you have to first tell whether it's a loss of control or not. Remember, whenever there is a sale of shares of a subsidiary company, you start by saying whether control has been lost or not. That is your first important point. So in this case, if the sale of a share results in a loss of control over a subsidiary, then a profit or loss on disposal should be recorded. You have to tell both the ways, if it's a loss of control and if it's not a loss of control, so that it becomes very clear that the current treatment of the company is correct or not. If there is no loss of control, then there should be no profit or loss on the disposal and no remeasurement of goodwill also, because he is still a subsidiary. So in the beginning we'll have a subsidiary, still he will have that goodwill only. So no remeasurement of goodwill also when there is no loss of control. In this case, there is no remeasurement of good and there is no profit or loss. Now you are telling the correct thing. So for that you will be getting 1 mark. Okay. Second mark. So instead the transaction is accounted for an equity. So how is this transaction accounted for? That you need to say. It is accounted for an equity. Your NCI will increase in NCI, because earlier you had 100%. NCI was 0. Now you sold 5%, you became 95%, NCI is now 5%. So NCI increased, right? That means from NCI you are selling to NCI some of your shares. It's just the shares are changing hands. From you it is going to the NCI. That's it. 5% is going to the NCI. There is no actual transaction. So that you need to write in your answer, because in this case this is not a loss of control. This is a increase in NCI. So for that you will get 1 mark for telling the correct treatment. Third mark you will be getting for all this. There are some calculations also that is done. So for that you will be getting the 3rd mark for saying the impact of the incorrect. So Cloud has incorrectly recorded a profit on disposal in the consolidated statement of profit or loss. What happens? This will overstate profit and it should be removed. Okay. So whenever figures are given to you, my dears, please use the figure. Figures have to be used. If it's given, if it's not given, okay. Like in the first case, recognition of cash flow from the borrowing, no figure was there, you are just writing it. But here you need to write. Because the requirement starts with saying use calculations. Sorry, what was it? Yes, explain with suitable calculations. So you have to explain wherever you need calculations, you have to provide it. Okay. Maybe you'll be getting one mark extra there wherever calculations are required. Okay. So cloud truths. Now, how do you start? Because you told it's an increase in NCI. So you have to find that increase in NCI. You have to account for this. How are you going to calculate this? This will be calculated. You have to write in sentence. Before you actually write in figure, you have to write that this is what you are going to do. So this will be calculated as the percentage of net assets and goodwill sold to the NCI. Because net assets and goodwill at 100%, you are selling to the NCI, no? You are selling 5%. So the net asset and goodwill also will be sold to NCI. That you have to calculate. So this means this amounts to 1.5 million. How? Goodwill was 5 million, net asset was 25. Add both and take 5% because NCI has 5% now. From 0, it increased to 5%. That's why 5%. Now the difference between cash proceeds and the increase to NCI is accounted for an increase of 0.5 million. What is it? Cash proceed. How much they have received from selling it, and also the increase in NCI. That increase will be accounted or recorded under other components of equity. You have to write this. All those things needs to be there. So the cash proceed was 2 million. Okay. Out of that, you are selling 1.5 million. Net 1.5 million worth of net assets and goodwill. So it's a profit, 0.5 million. This is recorded on the other components of equity, not a profit. Okay. Now coming to the third one, revaluation of property, plant and equipment. Cloud purchased an item of property, plant and equipment for 10 million on 1st of January 2000. So this you have to record for 31st December 2001, remember. And this was on 1st of January 2000. So that means for 2 years. Okay, whole of 2000 and whole of 2001. Useful economic life was estimated to be 5 years at 31st December 2002. 2000. That's 1 year. The asset was devalued to 12 million. At 31st December 2001, next year, the asset value had fallen to 4 million. So can you understand the scenario? It increased from 10 to 12 and then it fell from 12 to 4. There's an upward increase and then there's a downward. So the downward revaluation was recorded in other components of income. This is property, plant and equipment. That means you have to apply the rule of IAS 16 here. So now, whether it is correct to record it in OCI or not, that's the issue here. So immediately you start by saying what the standard says. Here also the same thing you have to say. You have to define, then you have to tell the correct treatment, then you have to say here what is the incorrect treatment and the impact. Okay. So IAS 16 states the revaluation gain on PPE are recorded in other components of income, right? And they are held in a revaluation reserve in equity, other components of equity. But here there's a revaluation losses that are charged to OCI. But revaluation loss also you cannot charge everything. There is an extent according to IAS 16. So revaluation losses are charged to OCI to the extent, this is important, that the revaluation reserve exists. For example, your revaluation reserve was 5 million and you are having a revaluation loss of 10 million. You can only recognize up to 5 million in OCI. The balance 5 million will go to profit and loss account. So exactly that's the thing here for that specific asset. So any revaluation loss in excess of the balance of the revaluation reserve will be charged to profit and loss. Let's see what's happening here. Okay. Now, when you're writing different dates, make sure that you're writing it in different paragraphs. For example, this will be in one paragraph, this will be in a separate paragraph. Okay. So at 31st December 2002, there was a revaluation gain of 4 million. Okay. How and being the difference between the carrying amount of 8 and the fair value of 12. This is how. Okay. Carrying amount was 8, fair value was 12 million. Again, how did they get the carrying amount 8 million? It was 10 million, right? Depreciation. You have to deduct the depreciation. That's how you are getting it. So here they told that this for 5 years, right? Depreciation. That means 1 over 5 years. So you have to deduct it, the depreciation, 1 over 5 into 10, which is 10 over 5, so which is 2. So from 10, you minus 2, the depreciation, and 8. 8 is the carrying amount and revaluation is 12. So from 10 to 12, 4 increased. Don't forget to minus the depreciation. It's not 10 minus 12. Okay, after you deduct the depreciation, you compare with the fair value. So or otherwise you can write 4 over 5. How 4 over 5? Because when you deduct the balance, okay, if 1 over 5 is the depreciation, the balance will be 4 over 5. That is there. So 10 over 5 and the fair value is this one. So this will go where? Devaluation. Other comprehensive income, OCI. Okay. This revaluation gain will go there and it will be held in a revaluation surplus in the equity. Now coming to 31st December 2001. Again you have to find the carrying amount of the asset before the revaluation. You have to find out. This is 9 million. How this is 9 million this time? Because remember 31st December 2000, it was taken to the fair value of 12 million now. So this 12 million you have to now take the depreciation of it. Okay, so how are you going to take the depreciation from 31st December 2000 to 31st December 2001? 1 year went by. That's why you see earlier this was 5. Now it is taken as a 4 and 3 over 4. Because depreciation will be definitely 1 over 4. So balance is 3 over 4. So 3 over 4 into 12 million is 9 million. Or otherwise, if you are getting confused over 3 over 4, what you can do is 12 into 1 over 4. Because depreciation you want to find, right? So it will be 3. So 12 minus 3. Hence it will give you 9. It will give you the same figure. This is more quicker method, right? 9. So we have told that it fell down to 4. I don't remember, but it's okay. You don't have to memorize the figure. You always can refer back to the scenario. It has fallen to 4. You see? From 12, so when they say it fallen to 4 means not from this cost. Don't take this cost anymore. You have to take this revalued amount. From here it fell down to 4. That's why we now have to take the depreciation on this 12 million. Understood? So that 12 becomes 9. And from 9 it fell down to 4. To 4, not by 4, to 4. So the difference is 5. And this is a revaluation loss. And where will this go? If you see what is there in the OCI. OCI, it is recorded what? 4. It's a revaluation gain of 4. And here you're having a loss of 5. So up to 4 million, this you can charge in the OCI. But the balance, okay, that is the balance in the revaluation reserve also, that 4 million. The remaining loss of 1 million, because it's 5, no? Total is 5. Out of 5, only 4 only you can take in OCI. That one will go in profit and loss account. Okay, this should be charged again profit and loss. It's not enough to say, I have told you what is the impact of the error. So the Claus error means that the profits are currently overstated by 1 million. Because that 1 million loss you didn't take now in the profit and loss account. So your profit are overstated by 1 million. So that's it for accounting issues. Now we are same way we have to apply the ethics. Okay, just read this tutorial note. Some entities perform a reserve transfer in respect of the excess depreciation arising from the revaluation. This policy is optional. Sometimes there is transfer that reserve. If you need to consider the impact of a reserve transfer, then it will be explicitly mentioned in the question. You don't have to worry about it. If in the question they say it will be transferred and all, then you have to think about it. Otherwise, this is the default position what I have just explained regarding OCI and profit and loss account when it comes to the devaluation and then the value is falling down. Now coming to the ethics. So for ethics, we don't have to read the case study again. You don't have to read the case study again. You know what are the accounting issues in each. In first one, what happened? From financing, you have put it under operating activity, the borrowing. Second one, the share of the subsidiary, you recorded a profit. Hence, your profit is overstated. Third one, this one, your profit is again overstated by 1 million because it's a loss that should go into profit and loss account. That you have put it under OCI. So now keeping this in mind, keeping your ACCA Code of Ethics, the 5 principles, the threads, okay, the safeguard that needs to be down. Now you need to answer your ethical answer, keeping all this in mind, okay. And ethics also, when you're writing, don't write general answers, okay. He's not ethical, this is a breach. You have to refer it to the case and specific accounting issues. There are 3 accounting issues, and this is a very good area for you to score maximum marks, because I feel that this is one of the easiest question. The accounting issues were short enough to understand. It is dealing only with one standard and one specific issue, and ethics is also easy to understand this, right? So here you start, okay. This paragraph you can just, I would say you can just copy paste it. This paragraph, opening paragraph, this I would say it is an introduction, right? It's better to have an introduction to it, because remember the 2 professional marks here. So this you can copy paste it, but anyway I will just read it. What is it? Okay. The directors have a responsibility to faithfully represent the transaction that the entity has entered into the year. So they are talking about the director's responsibility in the opening line, that they have to faithfully represent the transactions and all. This is because various user groups rely on the financial statements to make economic decisions. So the next one says the importance of the user. Now accountants are trusted as professionals. So the third line starts with accountants as professionals. Therefore, it's important that this trust is not broken. Fourth line says it is vital that the principles outlined in the ACC, you are referring to ACC's Code of Ethics. Whatever the principle is here should be understood and followed. So this 4 lines you write, 1 professional mark at least you will get, okay? Because following the structure of your answer, especially when it comes to ethics, will give you the 2 professional marks. Okay, I exactly cannot pinpoint you that this is where you are going to get your professional marks, because in your marking scheme also they never show that. But they see your structure, how you are writing it, what are the actions you are telling the accountants to do, in what order you are telling them. This matters a lot. Okay, professional marks does not mean you write two points extra and you will get the marks, or it does not mean that you use sophisticated English. Keep your sentences short and simple, also easy for everyone to understand, okay. Don't use hard language and hard words. It will not give you professional marks and all. So now I'm going to answer this in order. For example, the first issue first, second issue I'm going to write in second paragraph, third issue in the third paragraph. First issue was relating to the cash flow. So here, if you see the second paragraph, it started with that. And in the beginning, you have to link that with the background. Don't forget to link the 3 issues with the background. Okay, you see here, all these 3 accounting issues you need to bring here back and refer it to the background. What is the important thing in the background? Let me highlight it for you. The important thing is net operating cash flow is below the shareholders expectation according to the interim also. That is important. That's a fact. That is giving you the condition about your company, that your profit is not so good. Okay. And also net operating cash flow is also below the budget. So this is another thing. Profit is also lower. Cash flow is also lower. And also how the bonuses they are going to receive, it is based on what? Operating cash flow as well as profit before tax. And both can be manipulated. And it has been manipulated. The cash flow as well as the profit before tax. And they are receiving bonuses. Okay. And also these are some accounting ethical answers you can write. Dominant personality. Everyone follows him without question. And also he's a ACCA member. So he should follow this ethical guidelines and all. Okay. So now coming to the, but for second paragraph and all are specific to the case, that you cannot copy paste. Okay. So here let us start. The directors receive a bonus. You start by saying they receive bonus on what? That's very important in ethical issue. Any ethical issue you see, always start by saying where the bonus is based on, what is based on, because those measures only you will change. That is only whole of ethics that is being asked from you. Which area is manipulated and why? Because you are receiving bonus on what? Profit and operating cash flow. So in the 3 issues, what are you doing? Manipulating profit and operating cash flow. So this might impair their objectivity. Very important word. Remember the 5 words, 5 principles. What are they? Code of ethics, objectivity, integrity, confidentiality, professional competence, and due care, professional behavior. This 5 you need to know. You don't have to write it, but you have to know it. And in the case, out of this 5, which one is being impaired, or which one is threatened, which one is at risk, that you need to write. So In this case, it is objectivity. Why objectivity? How do you know which one? See, if it's it has nothing to do with confidentiality. Confidentiality will come if they tell you something regarding information that it should not be given to third party. The information has to be kept secret, right? It should not be shared with something like this. They will give in the scenario. They have given nothing about it, so it's not confidentiality. Professional behavior. It has nothing to do with professional behavior also in this case. Why? Because they have not done anything which brings a discredit to the profession. Otherwise, they would have mentioned in the scenario. Then coming to professional competence and due care. It can be sometimes professional competence and due care when that, for example, that accountant or that director is not knowing, is not up to date with the knowledge and skills, he does not have the skills, he's not competent enough, then yes. But in this case, it does not look like that he's not competent enough, because first of all, he's an ACCA member, and second thing, he's telling others, he's a dominant personality, everyone follows him without instruction, without questioning. So it looks like that he's not someone who does not know, he knows what he's doing, which is unethical, right? So professional competence and due care is also not an issue here. So we are left with only two. One is integrity, one is objectivity. Okay. Integrity means when you are not honest. Objectivity means when you have a financial interest in the company. So therefore the decisions that you take, you will not be independent in those decisions. You'll be biased. You want to show your company in a good picture. So this scenario is exactly that one only. You want to show higher profit. You want to show higher operating cash flow. Why? To receive bonus. So you're not taking an objective decision. You're not being objective. You understanding? So it is impairing what? Objectivity. We'll come to one by one. Okay, integrity also will come, but objectivity first. So this is how you see whether objectivity is impaired or not. And another advice, because I have seen through the past papers, so I know the trend. Okay, this is for advice for the future students who is going to sit for the SBR exam. Mostly out of the five, it is mostly okay. Objectivity, integrity. These two are always there. These two are very, but it does not mean that other threes might not come. Other three also might come, but they come less compared to integrity and objectivity. It is always integrity and objectivity that has been threatened in the ethical question. Okay, everywhere I have not seen a question where objectivity and integrity are not being threatened. It is always objectivity and integrity, and sometimes professional competence and due care also. Okay. Okay, so let's start. So this might impair the objectivity when accounting for transaction has taken place during the year. Now tutorial note, okay? These are just for understanding, okay? Don't write this in your answer. So you have to make specific reference to the accounting error. You have to make that specific reference to errors in ethical questions. Always, not only in this question, any question. So this errors, why? Because errors only increases your cash flow. In this case, from operating activities and profit. What does that suggest? This is just a hint that this is just a background that what they are doing here. Okay, they have just told you. So let's start with the error. So the error in the statement of cash flow increased cash flows from operating activities, isn't it? Because you put it in the operating cash flow, that borrowing, which was supposed to be in the financing activity. So because of this, the errors relating to the share sale. Now you're talking about the next error. In one paragraph only, you can write all the three errors. It does not matter. So the error relating to the share sale and also the downward revaluation of the property, plant, and equipment. They have all overstated profit for the year. All of this. Okay. So what happens? It seems likely that the misstatements were deliberate. Another thing in the ethical answers, you have to write whether it is done something unknowingly, unwillingly, or something which is done deliberately. You will understand from the scenario. Okay. So in this case, because all the three, if it's one out of the three that where the profits are overstated and other two areas profits are okay, undervalued, we can understand, okay, it is just a genuine error. But in this case, all the three areas profit are overstated. So it's hard to say that it's a genuine error. Okay. So in this case, misstatements were deliberate in order to meet what? The bonus target, because your bonus is dependent on that profit. If you overstate the profit, bonus will increase. Now, it is unclear if it was the finance director who processed this incorrect. So in this case, usually we understand who did the mistake and who is telling whom to do that. But in this case, it is unclear if it was the finance director who processed this incorrect accounting entries, or if it was the other members of the accounts department. In this case, it's not clear whether it is a finance director who is doing it or any other member of that account department. Okay. However, other accountants still have even the other accountants, they still have an ethical responsibility not to mislead the users of the financial statements. So it may be that they are intimidated by the dominant finance director. Remember, they told in the background they have a dominant personality. This is how you have to bring this point in your answer at this point. Intimidated means you are pressurizing. You're pressurizing accountant to do as you say. So they should consider reporting any concerns to the other directors. Don't forget to give actions, what they are supposed to do. Professional marks will come from actions also, even if whether they ask you or not in the ethical issues. You have to give the actions. That means how to mitigate those issues, how to bring down those ethical issues to a lower level, if you cannot eliminate entirely. So you should consider reporting any concerns to other directors if possible, or they could highlight these issues to, these are the actions you are telling. Okay, you could highlight issues to audit committee or the external auditor. Earlier videos also, when I was discussing ethical, I have told this, that whenever you have to give actions, you first start by saying that you communicate with the person, try to persuade him, try to explain him or her, whoever is having a power over you, whoever is threatening you. It could be anyone, your finance director, right, your manager. First you go and tell, okay, that these are the consequences of not complying with the standard. Then if he does not listen, then the second thing comes, you have to talk with other people, for example the non-executive director, the other managers in your company, right? Then you have to seek legal issues, or also from ACCA also you can take help, the professional help. And finally the last resort is you resign. So these are the steps, this is how you need to give actions, and in these steps only you have to follow. You don't start by saying okay, resign, leave, don't audit in that company. You cannot do like that. You will get the marks, technically you're right, but the professional marks you will lose, because it's not very practical in real life to say you resign. It's not easy to resign. So you have to give practical actions when you're giving, okay, recommendations and all. So of course it may be that the misstatements were legitimate mistakes rather than a deliberate attempt to meet profit and cash flow targets. Nonetheless, accountants have a responsibility to ensure that they're professionally competent. Yes, it could be a mistake, but still it does not mean that accountants should be not competent. They should ensure that they're professionally competent. Thus, possessing insufficient knowledge of IFRS and IAS standards constitutes an ethical issue. If you don't have a knowledge, insufficient knowledge of IFRS and IAS, that also will lead to an ethical issue. So you have to make sure that you follow this. If this is the case, then the finance director or other relevant members of the accounts department needs to actively seek opportunities to continue their professional development. This is now you are giving advice to whom? This all you are giving advice to the accountant, whoever has done it, by listening the finance director, whoever is threatened by the finance director. You are telling, okay, communicate with this, communicate with the audit committee. This paragraph, the last one, you are talking about the finance director, what they have to do. So if this is a legitimate mistake, okay, accountants have to be professional competent. How they can be competent? By seeking out opportunities to continue their professional development. Okay. Now we are over with it. So now let us go to the marking scheme. Okay, if you see the marking scheme, as I told you, 1 mark per point, 1 mark per point, 1 mark per point, 1 mark per point. Professional marks, 2 marks. If you see cash flow, 3 marks, as I told. Share sale is 4 marks because that 1 mark additional for calculations. Downward revaluation also 1 mark additional for revaluation. Otherwise, you do 3, 3, 3. So the balance. So 2. You see, This is how you get the balance. 3 here, 4 here, 4 here, 2 here. So the balance 7 goes for ethical implications. Okay. How are you going to divide this 7 marks? Okay. 1 mark you'll be getting. Okay, let's say at least 1 mark for explaining one accounting issue. So there are 3 accounting issues. So you'll get 3 marks. Now we have 4 marks left. Okay. 3 marks you will be getting for explaining the 3 accounting issues. What is the impact on the profit and cash flow? Another 4 marks for the accounting actions that you will tell them what they need to do. Okay. So that's it for question number 22. See you in question number 23.